Hello, this is Mijin from Iljusilon University. October 22nd, let's begin today's big news. Welcome to Mijun, where we continue to uphold the fundamentals of investing in United States stocks as always. Today's news broadcast will likely be delivered to you an hour or two later than usual. There was a delay because I had to go somewhere this morning. The place I visited today is the Embassy of the Republic of Korea in Malaysia. You can see the photo here right now. It was built in Hanok, a traditional Korean style. So it has a tiled roof and gives off a Korean vibe, so I thought the building was prettier than I expected. Compared to the past, these days when you visit the embassy, the staff are much friendlier. In the past, people who worked in government jobs often had rather stiff attitudes. But recently, their service mindset has improved, so going to the embassy isn't that unpleasant anymore. I think that's really fortunate. The reason I visited the embassy today, it was to renew my passport, and there was a reason I needed a new one. As you know, I recently moved to Kuala Lumpur, but for now, I'm still staying here on a tourist visa. Now, I need to apply for a visa. The kids have already applied for student visas in advance, so the parents can get guardian visas. But the problem is both the student visa and the guardian visa are only valid for 1 year. So, there's the rather troublesome task of having to renew them every year. So after my wife and I thought about it, we found a solution. It's shown here. There's something called the Malaysia My Second Home Visa, commonly known as the Malaysia My Second Home Visa. It's what we call a visa. There are 3 levels: platinum, gold, and silver. Even with the most affordable silver level, you get a visa that guarantees 5 years of treatment. So in my case, I applied for the 5-year Silver Malaysia My Second Home Visa this time. Once I get the Malaysia My Second Home Visa, not only my wife, but also my children won't need student visas anymore. They will be able to get dependent visas and stay with me in Malaysia. That way, the whole family is guaranteed to live here for at least 5 years. And after that, it's possible to keep extending it. I'm letting you know because some of you might be curious about how we're handling our residency visa in Malaysia. If there are a lot of people who are curious about immigration to Malaysia later on, I'll make a separate video to answer your questions about this. Alright, then let's get started with today's Big 2 news prepared for October 22nd. Let's begin. Before we officially start today's broadcast, I saw a really great comment on yesterday's show, so I think it would be nice to share it with you all before we begin. Yesterday's broadcast thumbnail read, 10 bagger stocks versus the magic of compound interest, what's your choice? We made an interesting thumbnail like this. It's really hard to control your greed when investing. We talked about this together yesterday, right? Now, after watching this broadcast, there was a subscriber who left a really good comment. Someone uses the identification out the window? I think the biggest enemy in investing is greed. What about wanting to chase 10 baggers or the greed to quickly maximize profits? That's how I ended up failing in investing in Korea. I quit my job, immigrated to the United States, studied, and worked as a nurse, steadily practicing what you might call American-style investing. I opened my eyes to investing. I earned money from long-term investments in my 401k Amazon and Nvidia. My success came from investment sense and compound interest. Now, when I see small-cap stocks soar by hundreds of %, I feel tempted. But I try to let go of my greed as much as possible and only invest a very small portion of my funds. It's around 1% or 2%. As my investments grew, I realized the key is to avoid losing money. My largest holding is still NVIDIA. I also have about 20% of my portfolio in advanced micro devices. People say that advanced micro devices' returns will be better than NVIDIA's in the future. In other words, that means the volatility is also that much higher. Now, rather than chasing that kind of volatility, I prefer stable investments, so I have no intention of reducing my allocation to investments that allow me to steadily enjoy the benefits of compound interest. After investing for a long time, I've realized that nothing is better than peace of mind. That's why I enjoy each day of my investment life more. I'm leaving inspired by your broadcast, Chief Executive Officer. I hope you always continue your investment and broadcasting life with peace of mind. Thank you. Yes, it seems like you've summed up the message I delivered on the broadcast yesterday very clearly. And also it's about real experiences and investment stories. So I introduced it to you because I thought it would resonate with you a bit more. I want to thank Out the Window Nim for leaving such a nice comment. Alright, then let's officially go over the hope we saw in the United States stock market yesterday. First, if you look at the S&P 500 chart, yesterday was a bullish market too. If you look now, there are way more green numbers than red ones. So there were a lot of stocks that went up. But compared to the day before yesterday, you can see that quite a few of the mega cap companies have dropped. Since Tesla, Google, Broadcom, Oracle, and Nvidia have dropped, you could say that among the mega cap stocks, about half went down and half went up. If you look at the market breadth of the S&P 500, it slightly increased to 53.08. Yesterday, it just crossed over 50. Now, among the 500 companies that make up the S&P 500, 53% have good short-term momentum and more than 64% have a good long-term trend. So, we can say that the breadth of the market has started to stabilize again. Next is the VIX index. The VIX actually dropped even further compared to yesterday. It's at 17.87. If that happens, since the 200-day moving average is at 19.33, not only did it fall below 20, but it's also staying below the 200-day moving average. If the volatility index continues to stay like this, in the end, we can see that this correction is nothing more than a brief passing breeze. Of course, since there are many cases where it drops like this and then goes back up, we should still keep a close watch on it. Next is the Fear and Greed Index. The Fear and Greed Index is almost the same as yesterday, moving from 28 to 27 and then up just one step to 29. But the market atmosphere still isn't that peaceful yet. There are still many investors who feel fear and end up selling their stocks. Or at least, it's more accurate to say that many investors are buying put options to prepare for any possible situation. The market score is 57, so it's a bit better than yesterday. Instead of entering the anxiety stage, it's returning to greed. This shows rising expectations as people question if the trend is reversing. If you look here, you can see it's hitting bottom and starting to rise. So if this direction is maintained, it can be evaluated positively. Up next is Mijun's top pick performance. Yesterday, actually, if you look at the S&P 500 map and the movements of the major indices, it was definitely a bullish market. However, artificial intelligence beneficiary stocks did not perform well. That's why, except for 5 stocks, all the others are in the red. Yesterday, cryptocurrency-related stocks rose, not artificial intelligence beneficiary stocks. Strategy rose 1.79%, B2 up 1.78%, Ethereum, Ultra Exchange Traded Fund increased 0.89%, Bitcoin 0.19%, and Meta was the only artificial intelligence beneficiary stock to rise, up 0.15%. And the rest were all in the red. Palantir dropped by 0.04%. Nvidia fell 0.81%, First Solar 0.94%, Advanced Micro Devices 1.05%, Taiwan Semiconductor Manufacturing Company 1.07%, Tesla 1.08%, Coinbase 1.50%, CoreWeave 1.57%, Broadcom 1.88%, Alphabet 2.37%, Celestica 3.22%, Bitmain 3.62%, Visteon 3.97% and Credo 4.94%. Lastly, Tesla Talen Energy dropped by 6.08%, performing the worst. Talen Energy. As you just saw, among the United States top pick stocks, there was one stock that plunged more than 6%, and that was Talen Energy. Someone has left a question regarding Talen Energy. The person using the identification Hejuran left the question. They said, Mijon, I also subscribe to Pending and have been a subscriber of your channel for 5 years. Talet Energy dropped a lot yesterday. Should I partially sell it? I think the momentum has dropped. Is that right? I'm asking because I don't know the reason for the drop. Hi Junim, you said you've been with the Mijon channel for 5 years. Thank you so much for being with us for such a long time and even joining the paid membership. Since you've been with us for 5 years, I created some content based on this question. I'll answer you through an article I wrote myself. First of all, there's something important we need to pay attention to. Yesterday, that is October 21st. Talet Energy, Vistera Energy, and Constellation Energy all plunged simultaneously. Well, there was a reason for that. It's because there was widespread selling across the nuclear and energy sectors that these companies belong to. So you can see it as all the nuclear-related stocks dropping. So in conclusion, Hanak of Iran was not a negative factor for a specific company, but rather a macro factor that affected the entire sector. That's what we can infer. Now first, let me summarize the sharp decline in the nuclear energy sector index. Yesterday in the United States stock market, there's something called the Nuclear Energy Index, also known as the Nuclear Energy Index, and in just one day, this index plunged by 6.48%. So you can see that all stocks related to nuclear energy dropped, and they dropped significantly. As you all know well, Talen Energy, Vistra Energy, and Constellation all operate nuclear power plants, and these stocks related to nuclear power plants? Aren't they major beneficiaries of the electricity demand surge from artificial intelligence data centers? That's why their stock prices have risen so much lately. Yesterday, all these rapidly rising stocks suddenly dropped, causing the issue. Let me give you the exact numbers. Yesterday, Constellation Energy dropped by 3.03%, Distro fell by minus 3.97%, and Talem Energy plunged by as much as 6.08%. I'll explain the reason in a moment. Now, secondly, there was a reason why nuclear-related stocks suddenly dropped all at once. It was because the price of uranium fell. The selling trend in the nuclear sector can be understood as being triggered by the drop in the price of uranium, which is a key raw material. What was uranium's futures price on October 21? After hitting its highest level in 15 months, it suddenly underwent a correction and plunged to its lowest level in a month. It dropped to $77 per pound. You might think that if uranium prices drop, it's a good thing because the price of raw materials goes down. Since it's seen as a sign of long-term profitability and expectations for nuclear power, a price drop can hurt investor sentiment for related stocks. That's how to understand it. But there's one thing we should pay attention to. Yesterday, not only uranium but also precious metals like gold and silver, which had surged recently, saw their biggest drop in years. It's profit-taking on assets that have recently surged. For your reference, in the case of gold prices, they plummeted yesterday by the largest margin in 12 years. That shows just how many people thought, it's gone up enough, so now it's time to take profits, yesterday. So you can see that nuclear energy stocks were also included in this overall trend of selling overheated assets. That's why even artificial intelligence beneficiary stocks dropped yesterday. So you could sum up the stock market yesterday like this, right? Artificial intelligence beneficiary stocks, gold, silver, and uranium, which had surged until now. Assets with strong upward trends and significant price gains all dropped at once. In short, they all declined together. Now here's the conclusion. In conclusion, the sharp drop in these three companies' stock prices was not due to company-specific problems, but to a broader correction in the nuclear sector caused by falling uranium prices and profit-taking. That's how it should be understood. Now, it's true that Talem Energy's short-term momentum has weakened. Now, let me give you an explanation while showing you the momentum update and the stock price chart below. First, if you look at the momentum update, out of the 26 indicators, 13 are suggesting a sell, 9 are neutral, and 4 are suggesting a buy. And the relative strength index has also dropped to 37 now. It's not oversold yet, but the momentum is continuously weakening toward oversold, so that's how you should see it. Here's the crucial part that's not good. The 51 moving average, both the simple moving average and the exponential moving average, have both dropped. The 51 moving average breaking is the main technical setback. That's how to view it. Looking at the stock price chart will help you understand faster. Back in April, most stocks plummeted because of Trump's tariffs, and then they rallied enthusiastically. And while the market was rallying like this, the orange line acted as a kind of support line. The orange line is the 21-day moving average, right? But the 21-day moving average was broken. Now it's okay for the 21-day moving average to be broken because every time the price drops like this, the blue line below acts as a support line. That's the 51-day moving average. In mid-July, after breaking the 21-day moving average, the price rebounded at the 51-day moving average and surged upward. Now here's the problem. This time the 51-day moving average has been broken downward. That means this selling pressure is the strongest we've seen since April. So from now on, the trend stays downward until it rises above the 51-day moving average. And only when it goes back above the 51-day moving average can we say that the trend has turned upward. So as of right now, when looking at technical analysis, a conservative approach may actually be more effective. That's how I would sum it up. Earlier, as I read the article I wrote, I explained that there was a specific reason why Talen Energy's stock price dropped the most. Let me show you that reason briefly. Now this is the stock price trend for Talen Energy, Vistara Energy, and also Constellation Energy. These are the returns over the past year. As you can see, Constellation only went up by 31%, Vistara Energy is up 43%, but Talen Energy has surged by as much as 113%. Yesterday, in the United States stock market, previously strong stocks and assets dropped sharply. So it was only natural for stocks with good returns to drop significantly in this kind of market. That's how you should see it. As a result, Talen Energy had to decline more than Vistara Energy or Constellation Energy. I think it's helpful to see it that way. I'll quickly show the remaining fundamentals. Look at the current ratings. If you look at the quant scores provided by Seeking Alpha, all three stocks are rated as hold. That means there's some kind of issue. They're not getting buy ratings, and the analysts affiliated with Seeking Alpha are giving all three stocks a buy recommendation. Experts working on Wall Street are giving a strong buy recommendation for Talen Energy and a buy recommendation for the other two stocks. Now let's take a quick look at why the quant score above isn't getting a buy recommendation. All three stocks need some valuation adjustments. They're considered expensive. During their valuation assessment here, usually they're compared to the average of stocks in the same sector. So these three stocks are actually growth stocks. Their growth rate is outstanding for energy stocks, so it's a bit unreasonable to compare these stocks directly with other energy stocks. That's my personal opinion. Currently, Talen Energy has an aspect that is much better than the other two stocks. That's the earnings per share. What this means is that recently, market analysts have been continuously raising their earnings forecasts for Talen Energy. In other words, a positive trend is being observed. Let's scroll down for a closer look. Here you can see dividends, but Talen Energy does not pay dividends yet. This means they're focusing on growth. However, Vistara Energy and Constellation Energy are paying dividends, with dividend yields of 0.47% and 0.42% respectively. Especially in the case of Vistara. In the past 5 years, they've steadily raised dividends, boosting their appeal as a dividend stock. Let's review the valuation to assess their attractiveness. Looking at the forward PE ratio, Talen Energy is at 75 times Vistara at 35.7 and Constellation Energy over 44. So, even though these are stocks in the energy sector, their valuations look just like those of high-performing growth stocks or tech stocks. That's how you should see it. Let's also review the price-to-sales ratio below. Price-to-sales ratio indicates how many times market capitalization exceeds annual revenue. Talen Energy's valuation has grown much faster than its revenue. Vistara is the cheapest at 3.57 times. That means if Vistara's earnings margin improves in the future, it can continue to drive its stock price higher. And Constellation Energy also has a price-to-sales ratio of 4.68 times right now. Next is the growth rate. There is one company whose sales haven't grown over the past year. That's Talen Energy. But in the case of Talen Energy, over the next year, we expect a 15.97% growth. Now, in the case of Vistra, the growth rate is pretty good. Over the past year, it was up 31.6%, and for the next year, we can expect sales to rise again by almost 15%. Now, next is Constellation Energy. The growth rate is a bit modest, so compared to other stocks, we can see that its growth rate is much lower. Now, let's scroll down and take a look at profitability. What about the gross profit margin? Talen Energy is at 28.8, Vistra is at 40.65, and Constellation is at 21.7. So you can see that Vistra has a very good margin, and it's the same for the net income margin. Talen Energy is plus 8.79, Vistra is plus 12.9, and Constellation is 12.19. Now, on the other hand, the free cash flow margin is highest for Talen Energy at 33.9%. It's showing good performance. I'll show you one more thing before we wrap up. If you look at the risks, here is the short interest. That's the short selling rate. For Talen Energy, it's 7.50, meaning 7.5% of all issued shares are held by short sellers. That's how it's displayed. So, therefore, it seems that the risk is currently the highest. I think this is something you should keep in mind. The next article we prepared is about Google. It's not good news, it's actually bad news. Because Open Artificial Intelligence has just released an artificial intelligence-based ChatGPT web browser, which means Google now faces a huge challenge. Now let's read the related article together. Open Artificial Intelligence has unveiled its first artificial intelligence-based web browser. With this, it has now entered into competition with Google on a new front. So what has Open Artificial Intelligence been up to so far? ChatGPT and Gemini, these two artificial intelligence models have been competing. But now, not only that, a new competitive structure is being formed in the web browser market as well. That's how you can see it. This new browser, called ChatGPT Atlas, can provide a more personalized web experience. It's designed to handle tasks like booking airline tickets or editing documents on behalf of the user. Whenever the user visits a website within the browser, it now lets you ask ChatGPT a question. What we're using right now is a web browser, right? You can think of it as having a new communication channel inside this web browser where you can ask ChatGPT questions like this. So for example, if a user opens a movie review, you can also ask ChatGPT to summarize it. And after finding a recipe, you can use ChatGPT's help to order the ingredients online. So for example, if there's a recipe for making a cake here, you can look at the recipe and say, order the ingredients from Amazon just as listed in the recipe, and you can place an order like that. Now, at the live streaming event on Tuesday, Open Artificial Intelligence's Chief Executive Officer Saim Eltman introduced this as an artificial intelligence-based web browser built around ChatGPT. And he also emphasized that artificial intelligence is a once-in-a-decade opportunity to reinvent the browser. Well, it's not really once in a decade. In fact, we've been using web browsers in the same way for over 20 years now. With artificial intelligence emerging, there's now a chance for web browser use to change. That's how you can see it. Open Artificial Intelligence announced that Atlas will first be available worldwide on Mac operating system, and in the future, it will soon expand to Windows, operating system, and Android as well. So, for now, you can't use it on Windows, iOS, or Android phones yet. What about the more advanced artificial intelligence agent features? For now, it's only available to paid ChatGPT Plus and Pro users. What about Open Artificial Intelligence? They have joined the ranks of several companies trying to reinvent the product known as the web browser, which started in the 1990s using artificial intelligence. So it's not only Open Artificial Intelligence creating a new browser, Perplexity Artificial Intelligence already has one, right? Recently, they launched an artificial intelligence browser designed to act as a digital assistant that automates tasks for users. It's called Comet. I tried using it myself for about a week, but I don't really find myself reaching for it. I always end up back on Google. Moving on. Also, Opera, the browser company, is said to be integrating more artificial intelligence features into their browsers. Now, because of this news, Google's stock price dropped as much as 4.8% during the session. By the end of the session, it went up a bit. Of course, Google isn't just sitting back and doing nothing either. Last September, Google integrated its Gemini artificial intelligence model into the Chrome browser. What about Google's artificial intelligence? It can provide explanations about the web pages you visit, summarize information across multiple tabs, and even handle tasks like reopening some of the websites you previously closed. There are actually a lot more things it can do besides these simple tasks, so you can think of it that way. Now, I'd like to share my personal opinion on how much damage this news could cause from the perspective of us Google shareholders. The browser market for the past 20 years, actually almost 25 years now, is a prime example of a field where market share doesn't easily shift based on technology alone. Though Google's Chrome now dominates the market, you likely remember how things once were. At one time, everyone used Internet Explorer. You might remember this. For a while, Internet Explorer was the main browser. But even after Google's Chrome appeared, it took a really long time for it to overtake Internet Explorer. So, the reason it's hard to switch to another browser once you start using one is because of user inertia. Most users find it bothersome to change tools they're already familiar with. You have to download a new browser, install it, and that's not all. These days, our users use bookmarks and favorites, and there are many websites where they've already created accounts and saved their passwords. They have to change all of this. And finally, you have to set it as your default browser. Doing all of this is just too much hassle for us to willingly do. It's a bigger psychological and technical barrier than you might think, and many people can't do it because they don't know how. I want to emphasize that moving your browser to another one like this is actually a very difficult thing to do. Especially on smartphones, the default browser is deeply integrated into the operating system. Therefore, in my opinion, it's structurally very difficult for Atlas to quickly gain market share on mobile, and that's the conclusion I can draw. Google Chrome is the default browser on Android smartphones. And on many PCs, it's also set as the default when you install it. And this default setting has tremendous power. So unless users have a strong complaint like they can't use Chrome anymore, or a big motivation, they usually don't change it. As you can see, I use Edge. Edge is by Microsoft. I had a motivation. I wanted to try it out since I invested in Microsoft. So since I use Google's Chrome for a long time, I'm intentionally using Edge now to compare and analyze them. That's how you can see it. And what about Google's Chrome? Gmail, Google Drive, Google Search, and YouTube are seamlessly integrated into Google's powerful ecosystem. Therefore, since many users are already deeply integrated into the Google ecosystem, I personally think that leaving Chrome isn't as easy as it sounds. So in conclusion, at least in the short term, I believe that the chances of ChatGPT Atlas taking a large share of Chrome's market are very low. However, in the long run, if a new paradigm centered around artificial intelligence agents is formed rather than just a simple browser experience, then the existing market share structure could be shaken. That's how I see it. So, what this means is that right now, what we can do with artificial intelligence is very limited. It's just information that summarizes web pages. But if the browser reaches a stage where it can handle complex tasks on behalf of the user, that means we'll move to a stage where we can use artificial intelligence agents or artificial intelligence assistants much more easily and frequently. At that point, the browser experience itself won't be what's important. Instead, how smart the artificial intelligence is and how well it gets things done will determine which browser we choose. So if we look ahead to the future, if 7 Generative Pre-trained Transformer is Atlas Artificial Intelligence Assistant feature is overwhelmingly superior compared to the one integrated into Google Chrome, then there is still room to move beyond the niche market and break into the mainstream market. That's how you should see it. Therefore, in the short term, it's highly likely that Chrome will maintain its market share. Because changing your browser is not as simple as you might think. From a long-term perspective, artificial intelligence agent features will determine the outcome. Later on, if the Atlas Artificial Intelligence Assistant in 7 Generative Pre-trained Transformer turns out to be much better than the fun features in Chrome, then people will probably be willing to switch browsers. So, this battle won't be Chrome versus Atlas, but rather 7 generative pre-trained transformer versus Gemini. I'll wrap it up like this. Today's final content is the Mijun podcast. Today's main guest on the Mijun podcast is Palantir, making an appearance after a long time. Palantir's stock price has been moving sideways for a very long time. This kind of sideways movement can be interpreted as the stock accumulating energy. So once the direction is decided soon, the stock price could either surge again or drop significantly. And we're waiting for a catalyst that could determine this direction. That catalyst is the earnings results scheduled for early November. So, through this article, let's try to predict Palantir's earnings results. Right now, there's a lot of controversy about it being highly overvalued, but even so, let's take a look at the rosy future that could be in store for Palantir. That's all for today's Big Two Shin News on October 22nd. Thank you for staying with us until the end of today's broadcast. Mijun is not a channel that I run alone, but an investment journey that you and I create together. You can share your outstanding investment experience and valuable past experiences, or if you have any questions, please leave them in the comments. It really helps me a lot in creating the Mijun channel. Let's all keep fighting together until the day we all retire from investing in United States stocks. Have a happy day, thank you. Hello Mijun family, yesterday was a public holiday in Malaysia, so we had a long weekend. October is almost over now. Those of you in Korea must be enjoying the wonderful autumn atmosphere.
Hello everyone. I treated myself to some luxury over the long weekend. I listened to the Manager Kim audio drama alone, and Jaraga was so funny I kept laughing by myself. Manager Kim can't be a real person, right? Ha ha ha. Today we'll review an analysis article about Palantir. We'll take time to identify why the stock price is soaring and what to expect from the third quarter earnings. But isn't it amazing that the stock price has gone up by 90% in the past 6 months? What on earth is going on?
Yes, it's an impressive trend. But if you just say it's only going up because of the artificial intelligence craze, so Palantir actually has a lot more going for it than you might think. How should I put it? Strong artificial intelligence demand is a given, and especially in the defense industry, there are some really big contracts coming out one after another. The main highlight is the contract with the United Kingdom government. This 5-year contract is worth £750 million, over 1 trillion won in our currency. Yes, it's over 10 times larger than the last contract. Even more interesting, Palantir isn't just stopping with this contract. They've planned to make the United Kingdom a European defense hub.
A hub directly?
That's right. They're planning to invest an enormous amount of money, £1.5 trillion by 2030. They're planning to hire 350 people, signaling they're positioning themselves as a key player in the European government market, like in the United States. Wow.
The scale of the United Kingdom contract is really no joke. So they're not just winning contracts, they're actually trying to change the entire landscape of the European market? What about other businesses beyond the government sector? Any updates on commercial contracts?
They're also seeing continued results in the commercial sector. For example, Ruman Technologies is a United States telecom company. Also, they've renewed a 5-year partnership with Lear Corporation, which makes auto parts, especially in the case of Lear, Palantir's artificial intelligence platform. It's an artificial intelligence platform. They're rolling it out across all their factories worldwide. They expect to save over $30 million in costs in the first half of next year. Over 11,000 employees use it daily, making a significant impact. In addition, in sectors like defense or medical data, OneMedNet manages data from around 1,750 hospitals. They sign contracts with such organizations showcasing their technology. This highlights Palantir's true strength. It's more than just selling software.
Then how is it different?
We customize it for each client. We offer a consulting-like solution that integrates closely with the client's operating system. Once in place, it's nearly impossible to change and becomes a strong advantage. Just like what was shown during the Ukraine war, I see.
It feels like a tailored suit. With contracts from both the government and companies, expectations for their performance must be high. The third quarter earnings announcement is soon. What do the forecasts say?
Yes, it's scheduled for December 3rd, and market expectations are high. Check the company's released guidance. Sales are projected at 1.08 billion, over 45% higher than the same period last year.
45%, that's amazing.
Correct. They're likely to exceed $1 billion in sales for 2 straight quarters. The adjusted operating profit margin is about 45-46%, and we expect that margin to remain very high. Of course, as we fill positions in the United Kingdom branch and increase hiring, and as the end of the year approaches, seasonal costs like labor will rise. But the logpo poripori indicator is more important, you know? If growth rate plus profit margin exceeds 40, it's considered healthy. It's expected to be around 91% on an annual basis. For reference, this quarter it was 94%, which is an overwhelming figure that's almost impossible to find in the same industry. Wow.
That's really amazing. Even with strong performance and positive results, the stock price has risen so much that people worry it's too expensive, right? What do you think about this valuation?
Yes, that's the point. Honestly, the valuation numbers are a bit concerning. Compared to the past 12 months' revenue, it's almost 120 times, and based on expected generally accepted accounting principles earnings, it's over 400 times. By traditional standards, it's burdensome. But if you look at other successful artificial intelligence software companies like Snowflake or Datadog, they're also quite expensive. In the case of Palantir, it has both a growth rate close to 40% per year and high profitability at the same time. And especially with government contracts, once they're made, they last a long time and are hard to change. There's this kind of strong stickiness. Some analysts believe that this stickiness can give a different kind of premium compared to regular SaaS companies.
Government contracts have a unique aspect, right?
That's right. The strong rule of 40 score I mentioned earlier also shows the market values its future growth potential. I see.
It does seem that Palantir's unique strengths are reflected in its valuation. But still, from an investment perspective, it's not always just positives, right? Are there any risks or things we should be cautious about?
Of course there are. First of all, the growth in the commercial sector outside the United States is still a bit lacking. If you look at the second quarter results, United States commercial sales surged by 93%, but overseas sales actually slowed down a bit. This part needs to be improved. Also, the high dependence on a small number of very large government contracts could be considered a risk factor. High distance on position.
It's unsettling if everything is concentrated in one core place of the cafe.
Yes, but this high valuation is a double-edged sword. Because expectations are so high, if the performance falls even slightly short of the market's expectations, the stock price can fluctuate significantly. A beta value or volatility indicator over 2 or 5 clearly shows that.
So you're saying the volatility is high?
Yes, and you always have to keep in mind things like macroeconomic uncertainty, high interest rates, and the possibility of intensified competition with big tech companies like Microsoft and Google, as well as other startups. Yes, so to sum it up, Palantir is definitely showing amazing results based on strong artificial intelligence demand and its unique technology, especially its dominant position in the government market. The upcoming third quarter earnings will be very important, and going forward, Palantir will need to continue demonstrating this near-perfect execution ability.
Yes, that was a really interesting analysis. Do you think Palantir's remarkable growth and high valuation can continue in the future? What do you all think? I hope you'll consider it. That's all we have prepared for today.
Thank you for being with us today. Have a wonderful day. Thank you.
Subtitles provided. You can use subtitles and advertisements through Kakao Talk Plus Friend. Subtitles and advertisements are available on the Kakao Talk Plus Friend website.